folks, Bob Desmond here at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. What we're going to go over today is a topic that has been near and dear to my heart, which has been the performance of the FANG names and the business practices that are becoming more and more pervasive with these companies, which is the force feeding of a left-wing agenda. And I'm not being political here, it's fact. I get a lot of comments that, and I expect to have a lot of dislikes on this video, but that's okay. I get a lot of comments that, Bob, please stay away from the politics, stick with the charts. Unfortunately, they are intertwined at times and you cannot ignore them. So we're going to talk about the headlines that came out today. But before I do that, I want to play for you a brief clip of comments that I've made on Swing Trading Today, which is our analysis on YouTube, where I put together a commentary with regard to the morning's headlines, if they're worth speaking about, the pre-market activity, and we do an analysis of the charts that we're watching as potential trades, as well as we do market analysis or stock analysis for members who are at the gold level. If you're not currently a member, sign up for the 14-day free trial offer. Cancel anytime. All right, after we get done with our analysis of the FANG names and the news that came out today, and it's pretty heavy news, so stay tuned if you haven't heard about it yet. It is earthquake-like, seismic. So after we get done with the analysis of the FANG stocks and how they closed out last week and a review of the new headlines, we're going to segue into Best Stock Charts, which is where we review the stocks that we're looking to trade for the coming week. Tomorrow, for members, I will put together commentary doing a deep dive into Best Stock Charts, narrowing down those names that we're looking to trade, let's say the top quartile, and we'll do an analysis of the overall markets. How did they perform last week? Where do I see them going in the coming weeks? And then, of course, we'll talk about our positions. So let's get to it. Back to the FANG stocks. I have put together several videos documenting my opinion with regard to the business practices of Google, Netflix, Twitter, now PayPal has entered the fray, and of course, Facebook. So here's a compilation of my comments that I put together since late August, and I'll link to a couple of these videos at the end of this video if you want to segue in and hear the full-length commentary. So here you go. To the next article. Facebook bans activist mommy Elizabeth Johnston, I never heard of this lady, as the purge of conservative accelerates. Now, I was going to ignore this until I saw that she has 600,000 followers. Think about that. Now, this comes on the heels of the Alex Jones banning only a couple of weeks ago. I've said it in the past and I'll say it again. These companies, Facebook, Google, Twitter, are slicing their own throats. All right, I want to talk about the FANG stocks for a moment, as well as Nike. I have been putting out commentary with regard to Web 2.0 stocks. Take a look at my videos. If you want to take a look at them, I'll link to them as best I can. I did a couple of them at the end of this video. I have been warning since earnings season for last quarter that the FANG names were taking a knife and putting it to their own throats. And a lot of people took it as political, and sure, I guess you can be taken as political, but I didn't add the politics. These companies are becoming far too left-wing, and they're letting it impact their businesses. Google, if we close out the week, and I warned about this yesterday morning on Swing Trading Today, and I warned about it a couple of weeks ago as well. If you see a close down below 1204 on Google, that would be a confirmation breakdown. And we closed yesterday out at 1199.10. The week is not over yet. So I'm not ready to claim victory here and say I predicted it. However, if we close out the week at 1204 and we make a new weekly low, it's probably all game on for Google to the short side. Fund managers do not want to own a company or be overweight a company. I shouldn't say wouldn't want to own. They wouldn't want to be overweight a company who is being slammed on Twitter by the President of the United States for manipulating their algorithm. Happy Friday. Let's get to it. The headlines. We've been pounding the table for several weeks now with regard to the amazing short-sightedness of the Web 2.0 companies, and the drumbeat continues. One day after Jack Dorsey gets done testifying in front of Senate committees, he bans Alex Jones from using Periscope. Now, Twitter was the final major Web 2.0 company that would host Alex Jones's content. Now, this is not going to be a conversation about whether or not you agree or disagree with Alex Jones. It's whether or not these companies are biased, whether or not they're alienating half of their potential customer base. That's issue number one. Issue number two, are they attracting government attention? So yesterday, being Friday, we had a leaked memo reveals details of Google's censored search engine for communist China. Folks, if you're not aware of what's going on over in China, you have a score as a citizen. I mean, they track everything that you do, both on video, on your cell phone, every transaction that you make, and you are given a score. And your score dictates your ability to travel, terms of insurance policies, and bank loans. It is really over-the-top Orwellian stuff, and guess who is going to help the Chinese government? None other than Google. Google, who will not help the Pentagon, but they are willing to help apply a credit score to the average citizen in China. They're helping a communist regime. This is an atrocity. This is unconscionable what is going on. And this is not the only article that I'm going to reference today. Here's another one. PayPal, who just got a new investor who is George Soros, bans Alex Jones and InfoWars from using them as a payment processor. So not only do they ban Alex Jones, whether or not you agree with him, disagree with him, I'm not here to talk about his commentary, but I will defend his right, or anyone else's right, to be able to express their views and to be able to participate in commerce. Yet you have Apple, Facebook, Google, Spotify, and now PayPal and Twitter making a concerted effort to disable this guy's ability to make a living. What country are we living in? Now, you just heard my opinions and my concerns about these companies and being an investor in these companies. I feared that at some point in time, as these companies become more and more arrogant, and really now they're just full blown, shamelessly banning conservatives from using their platform. In fact, James Woods, the actor, is on Twitter. He just got suspended today. He's a conservative voice out of Hollywood, one of the few. He was suspended today on Twitter. So with all this unfolding, I have been very, very fearful to own these stocks. In fact, we shorted Facebook. We made a profit there. I have been very fearful to own these stocks. I warned that fund managers would need to reduce their exposure to these stocks if they had any brains about them. Why? Because there's only so long you're going to be able to put your thumb in the eye of President Trump, especially ahead of the midterms. So the fears that I was concerned about and expressed over the past few months have now come to fruition, to my final headline of the day. Here you have it, folks. Saturday, 9/22. Trump to investigate Google, Facebook under new executive order. And here you have it. The beginning of an absolute train wreck for these companies. Orders U.S. antitrust officials to thoroughly investigate whether any online platform has acted in violation of the antitrust laws. I can't wait to see how these stocks open up on Monday morning. Let's take a look at how they closed out Friday, because it is not pretty. We'll begin with Google. I'm going to use daily charts. Overlaid here in blue is the NASDAQ composite. So basically all you want to do here is just say, would I be better off accepting all the risk of owning Google, or should I have just bought an index fund of the NASDAQ comp or the triple Qs, really? So here you have it. Google peaked out at 1291.44. I have warned that if Google broke 1204, that it was all over. It would be a broken stock. We have now broken it. We're trying to hold on to support at 1158. We rallied off that level last Friday. A bearish engulfing of Thursday's move. You just saw the headline. You might imagine how ugly Google is going to open up on Monday morning. And not for nothing, look at the volume on Friday. It appears as though somebody was in the know on Friday because they were dumping shares big time. Let's take a look at Facebook. Same deal here. Dramatically underperforming the NASDAQ composite with much higher risk. It peaked out on July the 25th, whereas the NASDAQ was able to move on to all-time highs. Friday, a bearish engulfing of Thursday's move. And of course, big volume. Let's take a look at Twitter. Twitter just absolutely annihilated. And it appears as though we are breaking down even further. The 50-day moving average will cross down below the 200-period moving average. Let's take a look at our friends over at Apple. Apple, a bearish key reversal on Friday. I think we're breaking here. We have lower highs. I think we're going to break down to lower lows. In fact, we already have. The prior low was 1216.47. New lower low, 215.30. So, would you want to own Apple, Facebook, Twitter, Google, or would you rather own the triple Qs? Let's not forget about our friends over at Amazon, Jeff Bezos. They are beginning to weaken as well. Lower highs and lower lows. Folks, it's going to be an ugly Monday for these companies. Now, if they rally off the lows in the morning, assuming that the shares open down and they close stronger on the day, well, then it's all priced in. I don't believe that it is. I think that these stocks are going to tank on Monday. Let's get to the charts that we're watching for the coming week. Actually, the first chart up is the TBT. This is the ProShares Ultra 20-year bond fund. Members, we're going to talk more about the bond market tomorrow on the week ahead commentary because it is not pretty. We have a massive breakdown occurring on the monthly chart of the 30-year bond. I'll share the chart with you tomorrow. If we close out the month where we're at or lower, look out below for the bond market, and yields are about to surge higher. Now, the TBT, I've spoken to members about it. I'm not sure whether or not I spoke about it on one of my free commentaries, but we have an inverted head and shoulders set up. We have already broken out above the neckline. We are now beginning to continue to break out of this massive base, a multi-year base. This is not good for borrowers. It's very good for the banks. So the TBT, we're looking to get long of this coming week. We'll talk about the daily chart tomorrow on the week ahead commentary with members. IPG Interpublic Group, looking very strong here. Weekly chart, or actually monthly chart. An inverted head and shoulders setup, left shoulder, head, right shoulder. You can see that we have very strong support here going back all the way to, and maybe even before, 2001. There was support back here in 2016, then again in 17. Here we are, a very long consolidation, almost a bull flag setup forming here. We're looking for a breakout on IPG. Members will go to the perhaps weekly, but definitely the daily chart tomorrow on the week ahead commentary. The DBA Agriculture Fund, the Chinese just called the U.S. ambassador in for a meeting. That's not going to be a pretty event for the DBA on Monday, so we're looking to get long. These shares may just in fact get hammered on Monday with the new news out. However, they are looking as if they want to break out. We're consolidating nicely. Let's see what Monday brings. I would not go chasing these shares, even if they do spike. The Chinese have targeted farmers in this country for tariffs. They will probably continue to do so to pressure President Trump because that is part of his base, and they want him gone. Now, if there were no headline today, I would be far more optimistic about the DBA, so we'll watch it. New Skin, I spoke about New Skin last week. We broke out the week prior. We had a continuation breakout last week. We have resistance above at 88.28. My only concern here is Ultimate Oscillator putting in lower highs and lower lows while we're breaking out. Stokes look good. RSI looks good. Volume last week was okay, slightly below average, and it was below the prior week's high. So a bit of a concern there as well. But New Skin looking good. Members, more to come tomorrow on the daily charts. ROST stores, weekly chart. The momentum trade is really under pressure, folks. ROST stores, definitely a momentum stock, doing really well. It's been consolidating for several weeks now at the 95 level. What was the low last week? Low was 95.61. We had a bullish key reversal last week. Volume outstanding. It appears as though we are going to break out next week. So ROST stores looking really good. Members, more to come tomorrow on the weekend commentary with strategy. Commvault Systems, we've spoken about this one several times. It broke out a few weeks ago. We were looking for the pullback and a retest. We got one once. And last week we got it twice, a retest of the breakout point. It successfully held. We have Stokes above 50, looking good. RSI rolling over a bit, but that's expected due to the down week we saw last week. So, members, we'll talk strategy here tomorrow on the weekend commentary, because while I'm optimistic, I am not wildly optimistic because I do have a concern. We'll discuss it tomorrow as part of our strategy session. Canada Goose Holdings weekly chart. It's been consolidating for quite some time. We were owners of the shares several weeks ago. I believe back here, we booked profits. And the shares pulled back, and we are forming a support level at the $56 per share level. The low last week was $55.50. I'm looking for a continuation breakout above this upper band of resistance. Members, more to come tomorrow. I will say this about the weekly chart is that we are seeing a bit of pressure on the Stokes. I'm worried about them closing down below the 50 level. However, I'm not overly concerned yet. I think they may hook up next week, and that would be a double bottom setup for the Stokes, and a very powerful setup if we are breaking out. So Goose looking good. Down volume last week was light. CSCO Systems, we spoke about last week. We're looking for a breakout. We got the breakout. Stokes looking good. RSI looking good. Volume outstanding under institutional accumulation. And if you take a look at a quarterly chart, remember the quarter's almost over. We are getting ready to set a course for taking out the highs of Q4 2000, the dot-com peak. CSCO Systems looking outstanding. Members, more to come tomorrow. FireEye, we spoke about FireEye last week as well. We had a breakout last week. We're looking for the pullback and a retest of the breakout point. We got the retest of the breakout point. It held. The 50-day moving average is now flattening out and will soon begin to rise. It'll act as a rising floor for the shares. Volume was outstanding and rising sequentially. Ultimate oscillator, it broke out a few weeks ago, pulled back, retested, and a continuation breakout last week. An outstanding chart. Both lines on Stokes back above 50. Members, more to come on FireEye in terms of strategy. Ovis Sciences weekly chart. I haven't spoken about this one in a long time, but it's time to. We have apparently found at least a short-term bottom at the 66-cent level. We had a bullish key reversal last week and a new weekly high. We have rising ultimate oscillator, really good volume last week. Stokes are hooking up. So we'll talk more about Ovis tomorrow on the weekend commentary. So folks, I would ask that if you could please leave a comment below. Give me a like if you would, if you watch this on YouTube, if you're watching this on any other social media platform. Follow me there, leave a comment, I'll get back to you. If you're watching this on the website, enter your email address, We Hate Spam Too. We'll send you out a couple of free trade tutorials as well, and you'll get all of our free video commentary whenever I produce it. Members, I'll talk to you tomorrow on the weekend commentary. Everybody enjoy the remainder of your weekend, and be well.